Welcome to the Human First Executive. I'm your trusted host, Rob Kalwarowsky. And as always, we have a special guest with us. The managing partner for Sidecut Ventures, Mike Ma, is with us. Mike, how are you?
I'm great. It's a real pleasure to be on. I know we've been trying to do this for a while.
It's amazing to have you. And of course, Mike, we met in October at the Real Mental Health Summit. And since then, we've been trying to connect. So it's great to have you on the show. Now, Mike, before we get into Sidecut Ventures and the work you do, can you tell us a little bit about you?
Yeah, I mean, I'm a kid from Cleveland, immigrant son. That is really how I define a lot of my worldview. I currently live in New York. I have an amazing wife and 3 kids, and I journeyed through going from Cleveland, spent 1 year at University of Chicago, then I transferred to Harvard where I met my wife, which was the absolute best thing I got out of it. And I spent my life working in tech. I went to a company in Austin called Trilogy where I got to know a lot of people, and that still was one of the best founder networks. And I just fell in love with technology. We can kind of skip to the end. I did a whole bunch of small company stuff, big company stuff. I had a job at Bank of America, ran digital strategy innovation. I ran advertising at Vanguard. In fact, I had coffee with my old boss this week in Philadelphia. I've been the first chief growth officer and chief marketing officer of different venture-backed startups. I've been a founder, so my dad joke is 4 starts, 2 exits. I'm still working. And those are some of the highlights of sort of what define a lot of the things I think, and maybe get you a quick background of who I am.
Now, Mike, what brought you into the venture capital space?
I think what brought me in was it was by accident. It was 2019. I was doing consulting, fractional CGO, CRO consulting work. And this company, NextCube, said, look, we're a West Coast incubator making on-balance sheet investments. We're looking to verticalize and build an East Coast presence in fintech. And I said, sure. Like, we're looking for someone to lead that charge. And I thought to myself, I'm very much motivated by building and learning things. And I said to myself, for having been a customer of venture capital in various forms for a couple decades, I knew remarkably little about how the sausage was made. So I said, what the hell? Let's do it. And I fell in love with it. And inside venture, at NextCube, I should just talk about it. We built the fintech practice, built a corporate innovation practice. We raised a fund backing founders from historically Black colleges and universities. I deployed it, the first tranche of that fund, 18 deals for 17 companies in 7 months with, this phase, which did not go to an HBCU. I just fell in love with it. I became an operating partner at Sway Ventures, our sister VC, doing a little bit later stuff in the fintech practice. And I just thought, this is what I was supposed to do. It is the culmination. I love teaching. I'm a snowboard instructor, and we can tuck into that. And that very much impacts my life as my firm is named Sidecut Ventures, which is a ski and snowboard term. I was able to combine all the stupid mistakes I've made in my career, finding founders that are building amazing things in the world and leaving dents in the universe I care about, and coaching through the process and teaching and collaborating. I love building and being tip of the spear in the whole building and creation process. It's a drug, and I can't think of a better way to get to punch a ticket to the first row of that arena other than venture. And for me, this is a calling, very much what I want to do for the rest of my working career. It is not glamorous, despite what people think about like the words that it evokes for most lay people. It has been this has been the hardest job I've ever had, and I've actually never made less. I'm like negative for a year, so I'm negative income. But
me too, Mike. Me too.
Right? I'm having the time of my life. So to answer your question, it's very much a calling. It's a calling, and that's how I found it, or it found me, if you believe in depending what your spiritual beliefs are.
So one thing I love, and folks, if you go to Mike's website, sidecut.vc, one thing they talk about is we want coachable superheroes. And so I want to know, what is a coachable superhero?
Yeah, there's some marketing to that. The thesis of coachable superheroes is a shorthand to describe 2 parts of what we do that I think is unique. Coachable, we work with all of our founders, belly in the mud, fingers on keyboard, shoulder to shoulder for 30 days. We don't ask, unlike other accelerators or we don't ask for anything. One of the key phrases we say at Sidecut is, if you want to be a good partner, you go first, and we'll go first. We just want your time, attention, and ability and honor, opportunity to invest. So at the end of the day, we work with together. You like us, we like you. We're currently writing about a $250,000 check in a sub 10 million pre-seed company. That's how we do it. The superhero parts are we're impact investors, which is a dirty word these days. I don't know why, but it is. At the end of the day, we're going to invest in early stage companies. My LP, like formal answer is we invest in economic mobility, education, climate, healthcare, disability tech. But honestly, on our intake form, I asked this question: what evil are you fighting in the world? I'm very open to a good story. I'm not constrained by any particular like UN, SDG, or social term. I'm interested in a good story. I want to invest in companies that are going to leave the world a better place for my unborn grandchildren. And my thesis as a 50-year-old dude, like I've made enough money for people in my life who don't need it. This half, I'm going to focus purely on those. So that's the thesis. I mean, I'm kind of skirting the question you asked, which was what makes a coachable superhero? So you have to be working in those impact areas. And coachability, it's funny to read a lot of we've come up with, or at least I've come up with my own personal view, and it's action-oriented self-awareness. So when we work with our founders for 30 days, I don't expect to fix your business in 30 days. That's like hubris. What I am interested in is, are you aware of all the things that are going on, the problems, the excitement, the strengths, the opportunities in your enterprise? And hopefully, if I'm a good investor, I can add to the aperture of what that information contains. But then I learned and I seeded this strategy with a couple dozen of my angel investments personally. That was one gate in being coachable. The second gate is, okay, do something. And a lot of founders sometimes will tell you the things like, oh yeah, I understand this, I'll do this, I would do that, I would do this. And often I made a lot of those investments based on that feedback, but no, I actually want to see you do something. To go back to my coaching, I don't want you to tell me how you would snowboard. Let's go frickin' snowboarding together. I want to watch it, let's go. And I don't want to be there forever, but I want to see if you can make a change. Not because I said it. And usually these questions are just based on discovery of your own environment, not because Mike Ma says this is how you should be doing it. God, that'd be a terrible way to run coachability. So hopefully that gives you a little bit of what I think about coachability means. And the best turn of phrase that I think represents it is action-oriented self-awareness.
Yeah, honestly,
You're
Mike,
a coach. You're a coach. I'm just kidding. Tell me how that lands with you.
It's honestly like I look for the same type of folks. There have been clients that I've stopped working with because they are unwilling to take action. It's really, honestly, that's the difference between therapy and coaching is like coaching is about making your dreams happen. And yes, there is some psychological work that I do, but it's also about taking action and moving towards your goals and doing things differently. Right. And it's like, otherwise hire a therapist and do that.
Yeah.
And I think, and I'm like you, like I want to see my clients succeed. So I want people who do things.
Yeah. Agreed. And I think it's not to decry therapy, because I do think this is very interesting. I hadn't thought about that.
I love therapy. I'm not saying I go to therapy all the time.
I have multiple. Shout to I was on with James Oliver, another real ambassador, because I wrote a chapter in his book on founder mental health, and I was like, no, I keep a fair amount of the therapy industry employed in my household. But it is interesting to think about the mix and the ratio of like desired outcomes. I actually hadn't thought about it before. Like I do think therapy has an action-oriented nature to it. I don't know if it's like 80-20, 20-80 in terms of one or the other, but that was a really cool thought. I'm gonna think about that.
Yeah. Did I ever give you a copy of my book? I should. There's a great quote in there about therapy follows the trails of tears, where coaching follows the hopes and dreams.
Ooh.
Yeah, I was
deep
like,
cut.
It's a
I definitely want
it's a
that
phenomenal
one.
quote.
Is that you? Who said that?
No. It's a quote that we got from someone who teaches, I forget her name, but she teaches like leadership at Harvard or something like that. I wish I could say I was that smart.
I like that one. Thank you for that. Hey man, this is like the best podcast I was. I'm getting nuggets.
Mike, one thing I did want, one thing you mentioned, right, is there's a dirty name around impact investing. And actually I was talking to someone about that yesterday. He works in the mental health space, and he's not a real guy, but tell us a little more about that.
I don't know. So I don't know why this has come up. but I can tell you how it lands on me or how I encounter this. It's basically people just see impact as code for lesser returns or some sort of compromise. And I see it as the exact opposite, particularly, and it was never designed this way, but my philosophy has been, if you find founders that are focused on real world problems, economic mobility, access to childcare, incarceration, whatever, you name it, those are real problems, man. The real problems have real money attached to it. I think that is a way to sift through the chaff and the noise of trying to make sense of the next AR, Bitcoin, like e-com, dropship, and it makes a cappuccino too. Particularly in the world right now we're living in a post-Claudebot world where access to, before it was just access to information was hard, and sort of the web solved in Web 2, and access to compute was the next one. And now access to reasoning is now going to be commoditized. You are going to be, I think it's a huge filter, and I'm so glad to have invested, because I think a lot of my compatriots have invested in areas where they're either going to, the end of SaaS, or people are talking about, people have invested in areas that I think are going to be there. But look, my founders are on the front line of trying to figure out access to childcare, or how to employ blue collar workers, or how do you clean construction, how do you make the construction industry cleaner, and people are still going to build things and want places to live in. So those are real world problems when I find them, and we definitely use AI, and we look at AI in the problems of how these particular founders solve this problem. But I feel very insulated. I feel very confident that we're going to be a big returning fund, or at least I think it's going to be a huge asset to our returns by being impact. So again, I don't want to answer your question with a non-answer. I don't know where this comes from. It's just, I think people read stuff. I mean, it comes from some of the research, and maybe, it comes from other impact managers, and I don't want to cite anyone, but as a cohort, when people look at the, PitchBook data, Cambridge Associates, it's like, oh, impact funds seem to have, and I think they do numerically have lower performing funds than non-impact funds, but I think that is a execution issue, not a, and maybe my compatriots in impact or previous ones that are no longer here have just done a disservice to that, but I don't know. That's where it comes from. I don't get it. I obviously don't subscribe to it, so it's hard for me to it's like asking what's it feel like to be, left-handed. I have some idea, but I'm not that person.
I actually think you're right. Like this is I think it's similar to the leadership issue that folks have this belief that you have to be like a strong, powerful leader that commands people to do things. And we do have some of that, but it's like, if you look at the data, it's like the high trust companies return 2 to 3% more stock returns per year over 26 years.
Yeah. And
right?
it's, that's the public market aspect. And I think, I'm dealing at pre-seed, and I think there's a line you draw into the early stage market. And I think it manifests like this. When you work with a founder, early stage, there's deals like you have a fight with your co-founder, your customer leaves, your largest investor backs out, all these things. I really believe, like, the founders I'm looking for, and I think all investors are looking for this, like, when the chips are on the table, your back is against the wall, they put their head and they're like, okay, I know what we're going to do next, right? And so investors call survivorship or graduation or grit. I don't think I'm breaking any like anthropological things. I think impact founders who have a personal narrative and story will last longer than those who are there for money. And I think there's real financial return, both in terms of investment fidelity, making sure you're investing in real things, and survivorship. I think building stuff the world needs with founders who will run through a brick wall to make it happen is a return strategy. And people look at me like I have my head like growing out of my shoulder or something, and I don't know what to tell them. So, at the end of the day, though, what I've learned in this, it's actually that it turns so many people off, even though it sucks. It sucks psychologically to get rejection. It is actually a feature, not a bug, just because you know who your tribe is very quickly, and time is the most precious asset.
I mean, you also know, like, contrarian investing works, right?
Yeah, it's funny. Well, yes. I would say in my encounters in the LP community, they're aware of all these things in the left brain. I think they are still carbon-based life forms that have fears, irrationality, and they also know early stage GP, emerging fund one, GP, small fund sizes. outperform, but yet the data indicate all the money is going 80%. I'm going to mess up the pitch book 25, but basically like 80% of the assets went to like 6 firms. So this is the reason why behavioral economists have jobs, right? It is all logical, and yet I'm afraid to lose my job as VP of finance or VP of private investments at a large pension fund or whatever. Because I'm going to be gone in 3 to 5 years, even though like the returns are 10. I just have to not drop the ball so I can move the next. I mean, and that's just one narrative that may explain that discrepancy between those two things. So anyways, yes, people know this. I'm still waiting. I'll tell you, it ain't been easy. I'm not in Costa Rica having bomb. It's been rough, man. It's been tough sledding, but iron sharpens iron. And I think it's made us better investors and better fundraisers, this tough fundraising environment. So I'm here for it, man. I'm not going anywhere.
I 100% agree. There's a couple things, right? One is there was some research that came out not that long ago, but basically it showed that one is our subconscious, it's like it makes roughly 95% of our decisions. It actually decides before our frontal lobe catches up. So like even logically we know something, we've already decided before it gets to our logic part of our brain that tries to justify the decision we made, right? So that's one thing. The other thing is you're absolutely right, is there's misalignment of incentives. And so this is why folks hire McKinsey over somebody else, even though if you look at the data on McKinsey, well, I'm not just calling them out, but the big consulting firms, right? It's like they don't actually perform any better than anything else. It's just if I hire them, I have the brand name that I can sit and go, well, it's the brand name, right?
Yeah.
And so I think of course, there's a lot of things going on and it doesn't serve you, but I just want to give you that context in a sense that like you're fighting the battle that we're all fighting.
Yeah. I mean, and so that's the fundraising side. I can't control. I'm just a bid actor, a participant. I do control it in how I deploy capital.
That's right.
And this aspect that you bring up between this notion, I just think in the terms of bias, and I'm biased all the time as well. But this is the goal I have of trying to do the 30 days of working together. And I push my team who helps me with these diligence decisions is your pedigree, your history, immigrant founder from Harvard who's an open alum will get you to the start line with us. It will. In fact, I will admit we have bias. I think with other firms, sometimes those are their investment criteria. For us, it will get you the start line. But I also will find someone who we've led 6 rounds. I mean, I'm a solo GP. We did 10 deals. I've led 6 rounds. It's exhausting. But after you get to the start line or the top of the hill, just to continue the snowboarding metaphor, I don't care where you came from. I'm just evaluating what happened during that time. Is my evaluation of this without the same bias that you talked about with McKinsey? I don't know. Maybe, maybe not. But we work really hard. And we ask ourselves all the time, based on what they did with us, is this a coachable superhero? We don't share our diligence. I'm happy to talk with other firms, and other firms offer their diligence. I think it's nice. I don't really care because I am wholly that the McKinsey thing you described, and is not, again, no shade to McKinsey, but just the problem, the framing you described.
They won't listen anyways.
The framing you describe around bias is something I care a lot about. I care a lot about it coming from Cleveland, coming from and working with underrepresented founders. I care a lot about it from an early stage returns basis because I think it helps you find undiscovered aspect of it. And I tell just as back to my investors, it's like, here's why you should care. Investing, I think you brought it up, is about asymmetry. You have to know something that the rest of the market doesn't know, in addition to their data room and all the things that data I can find in the external market. I got to go in the foxhole with my founders for 30 days. I got to see how they handle fire, conflict, success, failure. Most investors want to know more than the rest of the market. I want to know more than the rest of the other cap table. And I tell all my LPs or prospective LPs, like, that's the benefit of doing this. And I hope it increases access. I hope it increases this sort of cognitive dissonance around what you should do and then what feels safe to do. So that's why, we followed party rounds with like a lot. We don't compromise our 30-day process, but we're a logo on Lotus, an investment with like every other VC in the valley, like really great investors. And then the other ones, we've led rounds and we're the only institutional. I do not care. I really don't. Good deal is a good deal. And I'm trying to honor this idea you bring up because I find this bias very frustrating. And we're a small, piddly fund and a large multi-trillion-dollar business, but like that's my small pittance of how I'm trying to honor that idea in this little shingle we have.
Mike, something that you mentioned when we were chatting in October was that the old VC model was exit around 7 years, and now it's been pushed out to 10 to 12. Can you tell me more about that?
Well, I mean, those are just, I think, more a reflection of public markets have not been great, for a variety of, and everyone has their own theories on that in terms of regulatory environment and also just general appetite in the market and why people don't want to go public longer. So I think a lot of that has been pushed out because of illiquidity in the secondary markets and how inefficient and the rips you have to take to sell in secondaries. I think, again, I'm not an economist at this level. This is why I deal down here in the world and I let all these things up here happen. The way I manage it is I'm just very priced. So I think those are the things that are happening. I do think a couple things are happening. I wouldn't make any poly market bets on my prognostications about public markets at all. In fact, maybe it's an argument to short anything I say. I do think they're going to open. I do think things are opening up. You're starting to see it now. One of the companies I was CMO of, it was just acquired by, I was CMO of OwnUp, and I was there between 2017 and 18. It was just acquired by Experian. It was public announcement, so that was great. So it's happening. I'm a N equals one thing that's happening more. So I do think those are going to happen. I also think secondary markets are becoming more efficient. And as more people enter and technology gets better, more market transparency in secondaries comes up. I think that gap between whether it's liquidity, I think that the liquidity window is going to come in. All that being said, for me, this doesn't have very much to do with the price of eggs in my world. The way I manage it is we come in super early. Our average investment market cap is in the single digits. So my view is like, I got plenty of flexibility whether we want to do, we just don't do hot deals. We're incredibly price sensitive. And because that gives us the flexibility to manage whatever sort of environment that comes in from liquidity to make sure we return money to our investors and have that optionality. So that also comes from being a coupon clipping family from Ohio. And that, I really do think it does that. Like I always look for a good deal. The Sunday morning activity when we grew up was open the Cleveland Plain Dealer, clip coupons on Sundays, and the coupons were in the funny section. So I read my funnies, I read my comics, and clipped coupons. And that was an incredibly formative experience for me. And I still do that. So that's a line between my life and how this firm operates. And also just by happenstance, I think a good deal for investors and why I think that
I love it. Nick, a fair amount of our listeners are founders or they work in startups. Can you sort of flip the perspective and give some advice on if founders are raising money, what should they look for from the VC?
I think of it like a marriage, and I mean it. We just said 7 to 12 years. The average marriage in the US is 8.6 years. I'm on your cap table 7, 12 years. So when people give me guff about being a 30 days process, like average marriage is 8.6 years. I'm probably on your cap table for 10 years. Don't you want to date a month before that happens? And I'm going to finish all my stuff in that 30 days before like whatever another investor goes through esoteric questions on your cap table or pushes some stupid part of your side letter. You're still going to take time for that. But our 30 days is going to be useful. So that's what I say to founders is, and being treated like a marriage. Maybe not a full marriage because, there's weird nuances, but treat it like family. Like these people are going to rock with you for 10 years. Like time is precious, man. I only invest at the end of the day. I just had my AGM and we brought all of our founders here in New York. And the best part of it, the AGM itself was wonderful. It was great. The day after, a lot of my founders from out of town, they just came to our office and we just ordered Chinese food, and they're totally different sectors, Vancouver and Bristol and Miami, and we just all over, and we're just having, I was like, oh my God, I do feel like a dad. Like these are all my kids, and my kids just came home from college, and I don't want them to leave, but they also have to leave to go do the things in the world. I think you should want investors like that. That's what I hope. That'd be what I would tell them. And it doesn't have to be me. There's so many amazing investors that do this. That is more than money. And I wanted to add more shape. That's like, oh yeah, do value added, yada, yada, yada. Man, they're people that should feel like family that you want to break bread with and you want to sit and have we ordered cheap Chinese food and drank all the leftover booze from my AGM, and that was the no shade to the event itself. It was great, but it was just such a wonderful part of that experience. That's how I think you should have a feeling. I think
Well, let me know the next time you do the day after. I'll be there.
it was so. I do a lot of movie references to my team, and they're so much younger. It's like this is like Jerry Maguire. I guess I would say this: if you want to know what it feels like to have a good investor, go watch Jerry Maguire. Find someone like Tom Cruise's character who's going to invest in you all the way. And even though they don't have frankly, most VCs probably don't have a pot to piss in themselves at early stage in doing stuff, but they just back you because of everything. And you bet on me like I bet on you. Find a Jerry Maguire. That's my, maybe that's a shorthand.
Show me the money, Jerry.
Well, you can have, it's such a wonderful movie. In fact, we have our team retreat next week in Vermont. I think I may force them to watch it. Some said they've watched it. I don't believe them because I think they're lying to me. But that's what I think from an old 50-year-old guy. That's my advice to you. Find, to add more shape to the whole, find a value added. I think it's more than that. And everyone has a different way of doing programmatic added value. It doesn't matter. At the end of the day, all this stuff, whether you're doing something like me or whether you're doing, another type of value add, there's so many great ones who do stuff. It's really to build a relationship, and it should feel like Jerry Maguire. That's how I think of it.
It's a great description, and for our younger listeners out there, watch that movie. I also make weird, I don't know if you watch my TED, but I make 1990s action movie jokes, and it's now it's oh no.
People are like, yeah. You had movies back then? What's DVD? I was like,
I did one on the Microsoft paperclip and the blue screen of death at one conference, and I was like, oh no, it's bombing.
I said Clippy. No one. I would have laughed, Rob. I would have laughed. I would have stood up in the back and gone Clippy, here for it.
That's right. Mike, I got to ask you, of course, as someone who talks a lot about chaos, I got to ask you, with all the chaos in the world, how can folks capitalize on the chaos in 2026 and beyond?
Yeah, I'm biased, but solve real problems for real people. I don't know, solve real problems for real people. And it doesn't have to be in venture. I just use venture because that's my backdrop. I was pitched, I remember, on an AI startup to help people decide what to watch on the different streaming services. I was like, I have zero interest in solving that problem. That's how I think the chaos, because I think so much chaos is created. It's like a bad derivative. It just keeps going over and over again. It's this chaos. It's just look around you and figure out the problems that are around you. My 7th grade English teacher, Mr. Thompson, I still remember this. He said, in writing, write about what you know. Write about what you know. And I think this, not to be super folksy about it, I think you just get through the chaos. I don't know if I was about to swear. I don't know if it's a swearing pie. Do stuff. It's do shit you see around you and care about. And I think that's the clearest way to cut through the chaos. I think it's very hard. it's a simple thing to say, and it's a hard thing to do because people have bills and money and kids. But if you can find a way to do it, it's like we're just writers. Write about what you know and really and care about, and everything else, stop. Do less of it. And it's incredibly hard to do. And that's how I think you cut through the chaos of it. Is you don't try and change it. The chaos exists. Just find the things. Write about what you know. Do shit you care about. And then stop doing stuff you don't care about. That's the hardest thing.
That's almost the first thing I work with most of my leaders on, is to say no to more things.
Yeah.
It's that inner clarity is first, and then it becomes easy.
Yeah. And I say this as a student of that. I am working on that. If I turn the blur off of my, this is not, this unblurred background is not the background of someone who says no. So it is a struggle and a diet of the mind every day. I still fight.
Book me next week. We'll work on it next week. We'll book me and we'll work on it.
Cheers. Awesome. Looking forward to it.
Yeah. So Mike, for folks out there, if they want to find you and connect with you, obviously they should go to sidecut.vc. I've also dropped your LinkedIn in the podcast notes. Is there anywhere else you want folks to find you and follow you?
Yeah, that's probably the best place to do, particularly founders. And I'm going to talk to founders directly. Like when I say fill out my form, I'm a solo GP. All stuff goes through my form, warm and cold. We read everything that goes through. I ask weird questions on it. It's not this generic form. We ask 2 weird questions. Who's the best coach you ever had, teacher you had, why, and what evil you're fighting over. We read them. Like they mean a lot to us. So please do that. I'm okay with LinkedIn. I do it in spades on this. My email inboxes are a total mess. I would say probably LinkedIn. LinkedIn is the best way to get a hold of me, and I will get to you. Eventually, it may just be a little bit of time. And then if you're a founder, sidecut.vc, and then you can mention this pod. And Rob's a huge friend of the firm's. That always helps make sure that we can contextualize where you are.
Totally. And then also, we want to add one more question. What type of animal are you and why?
Oh my God.
Which is the worst interview question of all time.
No, I mean, so I'll shout out another real ambassador member, Jeff Sargent. We always joke we're both golden retrievers. I actually have my real Jeff Sargent best friend real medal, and he always sends me a text that says, "Hello, fellow golden retriever." So I'm just gonna go with that one because we're both like friend.
So sidecut.vc, Mike's LinkedIn is in the podcast notes as well. Yeah, thank you so much for joining us, Mike. It was amazing, and I'm so excited to see the performance of your fund and your founders. I think it's going to be amazing.
Thank you. It's been an honor. So glad to finally get this together. Look forward to actually getting together in real life as well.
Absolutely. Everybody, thank you so much for spending your time with us, and we'll see you all next week.